Hi, I'm Dr. Druv and welcome to my YouTube channel. This is a channel not on medicine, but all the other aspects needed to live our medicine lives. Today we're going to be talking about a macro overview of permanent insurance. As healthcare providers, we understand the importance of protecting our loved ones and ensuring their financial security. So that's why it's important for us to have an understanding of permanent life insurance. Now, what is permanent life insurance? It is essentially a type of life insurance that provides coverage for an individual's entire life. It not only provides a death benefit to the beneficiaries, but sometimes also includes a cash value component that can grow over time. The cash value component, you need to think about it as essentially similar to a savings account. So it's a savings account plus a life insurance policy that comes together. That is essentially what a permanent life insurance policy is. That's just the way that these things have been designed. They have obviously their own pros and cons. This particular episode is not on covering all the different types of permanent life insurance because they come in various strategies such as variable universal life, whole life insurance, index universal life, and so on. But it's important to understand that the main thing in permanent life insurance is that the premiums remain stable for your entire life, and the premiums are split into an insurance component that provides you a death benefit as well as a savings component, and there is various strategies around that. And so why is this important? Well, as physicians, we have a unique set of financial obligations and responsibilities, and so we have a high earning potential. And so while term insurance and invest the difference may work for certain physicians, other physicians may find this particular strategy of permanent life insurance another way of building wealth in addition to protecting their income earning potential. It also allows us to pass wealth on to the next generation and to our beneficiaries in the case of our untimely death. And this death benefit can be used to cover expenses such as mortgage payments, medical bills, and other living expenses for your loved ones. And so how does one go about buying permanent life insurance? Well, if I emphasized in the last episode that it's extremely important to find the right advisor for term life insurance, well, I would say 10% of those experts that you find in the term life insurance may be an expert in permanent life insurance who can structure the life insurance policy correctly in a way that benefits you and your family and helps you reach your goals. So I can't emphasize how important it is to research, educate yourself, and compare the different options available for various insurance providers. In order to educate myself, I had taken an educational course just on life insurance, just one aspect of a financial instrument, because I wanted to understand as much as possible on this particular product. And I didn't know if it was going to be beneficial to me or not. I just wanted to understand as much as possible and sift through the noise that basically exists in this world. The aspects of picking the life insurance are very similar to term insurance. How much money are you willing to spend for it in terms of premium, and how much death benefit do you need so that you can maintain your family's lifestyle over a certain period of time. The savings component is the one where you would have to spend some time. Is the savings component reliant on your insurance company to build it? Is it reliant on you to pick the investments to build it? That is what separates the various insurance products. And so we'll cover those in the future episodes, but that is essentially also something that you would have to think about. If you're looking at that, you need to look at something called a dividend scale interest rate of your insurance company and its history. And so I tend to look at the dividend scale interest rate minus 2% on the savings component, not the number that the insurance company tells you. Is it designed for estate planning or high cash value? What riders does it have, such as paid up additions? term insurance that can be added to permanent insurance. Well, that's 5 minutes already there. And so is it designed in a way where you're not paying taxes and the savings component grows tax-free, and this is a concept using a maximum tax actual reserve in Canada, the MEC line in the US. And what happens if you cancel your permanent life insurance policy? What happens? Well, in the case of term insurance, it's easy to understand, but in the savings component, there's a few aspects. And so, in conclusion, permanent insurance, which has various categories, is a type of life insurance that provides coverage for an individual's entire life. It also comes with the savings component with it. It provides death benefit to our beneficiaries, which can be used to cover expenses, similar to term insurance, but it's a little bit more nuanced, if I can call it a complicated investment savvy product. But if it's something that works for you, you need to get educated on it. I got educated on it, and it may add value to you and your family's life. And so, a few action items: if you'd like to follow the exact frameworks used by affluent physicians to take back control of your time and money, then check out the link in the description below. I make these videos because my mission is to help 10,000 physicians across the world fight burnout, because I wish that someone was there holding my hand through this wealth-building journey. Come and join my free Facebook group, Like-Minded Physicians, where I'm building resources like cheat sheets and calculators and everything in between to live our best lives. On that note, thank you very much for listening. Thank you for taking your time, for taking care of patients and listening to this video. I'll see you in the next episode.